Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock, with news markets are absorbing the implications of the no vote in Italy. But first, the American election result has created considerable uncertainty over the policies the new administration will pursue, but it is too soon for the Federal Reserve to judge whether its plan for gradual interest rate hikes needs adjusting. That's according to one of the key voting members. He went on to say that a strong fiscal stimulus program might in fact speed up the Fed's rate hike plans. But in the meantime, the US economy rolls on. Today we got data on its giant services sector, and both sources showed it expanding fast in November. The Chinese services sector is also expanding faster, and together with the US, that is driving the fastest expansion in services worldwide in a year. In Europe, financial markets held their nerve after Italian voters decisively rejected changes to their country's constitution intended to speed government decision-making and spur Italy's stagnant economy. In part, that was because polls had predicted the no vote, giving investors time to adjust, and also because political instability in Rome is not exactly unusual. But the potential for market turmoil is still there, and it is still a long period of government paralysis and delayed plans to fix Italy's ailing banks, whose shares fell overnight sharply. One thing that may reverberate here from the Italy situation is that sovereign bond yields may rise, causing conservative bond investors losses. In Australia, they're expecting their biggest holiday retail season of all time. Revenue growth may be fast online, but it turns out margins are great in Aussie bricks and mortar retailing. So much of the main threat to their retailers is the arrival of foreign-owned physical stores chasing that higher margin. The Aussie property market is changing too, and banks there are raising interest rates, boosting margins. Meanwhile, the RBA will review its policy rate today, but no change is expected. In New York, the US Treasury 10-year yield rose for much of the trading session, but there is now lower, now at 2.37%. Oil prices are up again today, now just under $52 a barrel for the US benchmark, while the Brent benchmark is now just under $55 a barrel. However, there are concerns in the market over OPEC's ability to restrain output as agreed, and the early signs are not good. And the US rig count climbed to its highest level in more than 10 months and is set to grow by 30% in 2017. The gold price fell sharply today in London, down to $1,166 an ounce, but it is clawing much of that back in late trading in New York. The New Zealand dollar will start today at about the same level it was at this time yesterday, at 71.3 US cents on the cross rates, at 95.4 Aussie cents, and against the euro up to 66.5 euro cents. The TWR is now at 76.9. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.